Well, welcome everyone to NPL Day's SCEE panel. Delighted to see you all again. As we were saying, it feels like an alumni reunion because we usually all meet on a regular basis, either in meetings or conferences or over coffee. So aside from having this presentation today in this panel, it's just really delightful to see that everyone is well and healthy and has survived this most interesting day. Our bios are apparently up somewhere, so we don't have to go into great detail about who we are, but I think it would be helpful anyway if we could just briefly introduce ourselves to the listeners. And I'll kick off by simply saying that I'm going to be moderating this panel. My name is Denise Hamer. I'm head of two teams at a law firm called Kinstellar. One of them is Asset Solutions, which focuses on non-performing and non-core assets. And the other one is traditional restructuring and insolvency. And I focus geographically on Central and Southeastern Europe. Maybe I'll just go in a circle. Maja, would you like to kick off if you would?
Hi, my name is Maja Žgajnar. I'm a partner with CMS Global Law Firm. I focus on banking and finance, distressed debt and restructuring. Hello, everyone.
Bernhard?
Hello, I'm Bernhard. I'm CEO of AxFina. AxFina is an asset and loan servicer that spearheads innovation digitalization across 7 countries in SCE and CEE. And we are happy to be here today.
And happy to have you as well. Tamas, would you please say a few words?
Yes. Hi, everybody. My name is Tamas Erni, and I am CEO of Loxon Solutions. Loxon is a business solutions provider providing software solutions and related consultancy for financial institutions and debt collection agencies to optimize their collection strategies, collection workflows, and to support it with the most modern IT technologies.
Very appropriate for this call. Anton, how would you like to introduce yourself, please?
Hello, everyone. My name is Anton Petrov. I am the Deputy General Counsel of First Investment Bank. First Investment Bank is one of the leading Bulgarian banks. It also aspires to be one of the most innovative ones in the market. It has foreign operations in the Netherlands and in Cyprus. And it also has a subsidiary bank in Albania.
Thank you, Anton. Dana?
Hello, everybody. My name is Dana Dulciu, and I work in Raiffeisen Bank International in Vienna, and I'm responsible of the team dealing with special exposure management booked in our subsidiaries in Central and Eastern Europe mainly.
Thank you, Dana. And last but not least, Edwin, please.
Hi there, I'm Edwin Harrop. I'm a director at Alantra CPA. So we're an investment bank that specializes in advising on NPL, structured finance and ABS across Europe. And personally, I cover Central and Eastern Europe, having worked on this region both as an advisor and as an investor, and having met many of the panelists before.
Indeed, indeed. I'm beginning to recognize all your coughs on Zoom, in fact. That's how well we know each other. Let's just get into our discussion. I think one of the pressing issues is, and I think we all recognize it, is that we've been in a sort of almost suspended animation for the past year, in a sense, due to the various central bank liquidity measures and moratoria. And this is a kind of a sort of artificial situation. And what's interesting, particularly in our region, and I will stop talking soon, but what's interesting in our region is that because the markets are relatively small and shallow and so interdependent, it seems that each market is watching the other market to see who's going to be the first mover to pull the rug out. I mean, even the United States has just passed a $1 trillion bailout package. So I read recently that out of the 120 plus banks that the ECB supervises, actually only 30 banks or so have a good sense of what their asset books look like, their back books and their front books, and what their credit quality is. And I'd be curious to hear from, particularly from Dana and Anton, who are sitting at the coalface in the banks, what your thoughts are about the impact of this moratoria and what's going to happen when this moratoria and liquidity measures expire. Maybe Dana, you would like to kick off with that, please.
Yes, so I will start by sharing a few data I think relevant for everybody that the regulators provided. So we have basically two types of measures. So we are talking about moratoria, so roughly 800-900 billion of loans under moratoria as per latest available data, as well like 6% of the total loan portfolio were offered, and it is known on the market, at least in the region, roughly like 85% of these loans already expired this moratoria already expired by end of December. So in some countries in the CEE, you still have a second or third round of payment moratoria available, like in Hungary, Romania, I don't know, Bulgaria, but we do not consider significant valid measure anymore, which brings, of course, the question, what's happening after moratoria? And in this respect, banks and also regulators are looking at so-called cliff effect. So what means is that what could be the impact of ending this moratoria, and we are looking from different support measures which exist in the region, and they are quite diverse, as you also mentioned. And these support measures have different maturities, not all linked with the payment moratoria. So all in all, the moratoria have an impact, and the second is so-called public guarantee schemes. These are also diverse, and for instance, we know like roughly 40% have such residual maturities, even between 2 and 5 years. So this gives us a bit of let's say optimism in terms that it will not produce significant effect in all countries. And last idea from my side would be that in terms of which companies were beneficiary of all these measures, it is clearly that SMEs were benefited mostly from both moratoria and public guarantee schemes. And of course, we in the banks are very much, let's say, looking at this, and we, how to say it, we are preparing for the worst and hoping for the best. So a lot of proactivity, I would say, even maybe others will have a different opinion, but on our side, looking at portfolio, meeting the customers, screening via different tools, and trying to understand the real problems of the customers in the immediate period, and support, of course, them.
That's very interesting. So contrary to what I read in Reuters or Bloomberg, in fact, Raiffeisen at least does have a good idea of what your credit position is.
Yes, we are looking. Of course, there are certain limitations because given by the moratoria that moratoria does not give exact the immediate forbearance status, but we are obliged according to the EBA guidelines to look individually of unlikeliness to pay criteria for each customers, and this process is running also for these customers regularly. So from this perspective, we do not have this message that we do not know what's going on. But of course, we expect certain increased number of companies having troubles, and we try proactively to approach. Let's see if it's the best measures, because this is also a discussion.
Right. Your assumptions are key. Anton, you're sitting also at the coalface. What's your perception?
I would completely agree with what Dana said. Most of the things are actually applicable to Fibank and actually the Bulgarian system as well. The good thing in this case is that this future moment we're talking about, the lifting of the moratoria, is quite certain, and everyone has been preparing for it quite steadily. If we talk about Bulgaria, several national level measures were introduced from the start. starting from the different guarantee schemes, as that Dana said, low interest rate funding, and of course, as of today, actually a significant portion of the funds devoted to these measures have not been utilized fully. So from the perspective of Bulgarian banks, we see a lot of optimism. It seems that EU banks actually in general are better prepared than in 2008. Banks learned some important lessons from the crisis, and this, I guess, plays a key role at the moment. And to be more specific, the surprising thing is that from March 2020, the wake of the COVID crisis until the end of 2020, NPLs in the Bulgarian system, and I'm including individuals and company exposures, not public debt, they decreased, contrary to what most probably expected. And this statistic includes the wider definition of NPLs as per the EBA guidelines that Dana mentioned. In particular, we see decrease by approximately 300 million Bulgarian levs in absolute terms. At the same time, the total amount of loans grew significantly by almost 2.4 billion Bulgarian levs, and thus the percentage of NPLs out of the total loans outstanding decreased by almost from 9.55% to 8.74% for the whole system. And with respect to banks in particular, banks in Bulgaria continued the trend of increasing their provisions significantly, even after the wake of the COVID-19 crisis, which coupled with the decrease in NPLs in absolute terms, of course, would lead to even lower level of net NPLs. So, as a conclusion, I believe that these data support the view that even before the crisis, most Bulgarian banks had already crafted and started implementing, at the same time, ambitious and realistic NPL strategies. And now continuing what Dana said, it would include internal workouts, external servicing, and outright portfolio sales.
You both make very interesting points. I mean, obviously, the break cap buffers were definitely increased from 2008, and it sounds like there was very early provisioning, and you've been working very closely with your clients. Edwin, that's not good for us because we're in the selling NPL business. How do you see it?
Because a lot of people will be aware, transaction activity in 2020 was relatively muted, and that was the result of a lot of transactions being halted. And most of the transactions we're seeing now are of pre-COVID NPLs as opposed to NPLs as a result of COVID. And I expect that banks are going to be pretty cautious around selling COVID NPLs for the foreseeable future, and certainly till support schemes have come to an end. And that's because, first of all, there's a lack of data as to what's a temporary and what's a permanent NPL, and what's going to remain as an NPL after the pandemic and the restrictions have ended. And then secondly, I think there's certain political pressures that at the moment it would be seen as quite a aggressive move to be selling COVID-related NPLs. And I don't think that the market is going to price COVID NPLs at a level that banks think is attractive. So as a result of this, and look, there's also on top of that, there's the logistical challenge of preparing transactions, which is pretty difficult with all the restrictions and also executing a DD process. So as a result, the expectation, I think, both in CEE and across Europe is that there's probably going to be relatively limited activity during the first half of this year, and that transaction activity will probably kick off in kind of later second half of this year and into the next year.
Very, very interesting observation, because, you know, we've been all waiting kind of for a 2008 scenario where we basically all fell off a cliff. So this has been a much more gradual decline. Bernhard, you're also in the consultancy and as well as the actual servicing and investing side. What are your thoughts about what you've heard just now?
Yeah, so we mainly looked in the past month into, as Edwin also said, in transactions with relation to pre-COVID, assets. What we saw during the last year, we mainly looked at situation where there were platforms involved, mainly, servicer and NPLs in a platform, which we looked at because there were some issues during the, COVID period, which is still going on, which we then looked at both the platform and the underlying assets to acquire, and we still do. And that is what we also expected, that those platforms are gonna move, and we don't see any post-COVID transaction moves from the bank so far, and we don't expect them early this year. So what we see now, what we expect this year is that there is still the stopped transactions before COVID then going on, and going forward, we also expect some consolidation in the platform. What I mean is servicing and NPL buyers as one company. We still see here a consolidation play, which we participate with.
You raise, if I can just digress from our fundamental question here, you raise a very interesting point, Bernhard, which I take back to Anton and Dana. What we're beginning to see is bank consolidation, full stop, in the market. And do you, Anton, think that that's going to throw off some non-performing or non-core assets? Sorry, that was not a gotcha question. If you're not seeing it, that's fine. Maybe Dana, are you seeing any bank consolidation?
It's hard to say. It's too early from my opinion to say. Maybe an idea regarding on our side regarding the NPL sale platforms, like electronic platforms. So we are heavily promoting this. And for instance, starting this year, our group will perform all NPL sales via group solution with an electronic auctioning. So this is already agreed and implemented. And yes, looking forward how the market will react. We see a lot of benefits into this approach. And yes, we are looking forward to see also how this market will develop, because we know there are more providers of such services on the market, and as well as certain, I would say, focus from the regulator on data standardization regarding these NPL sale transactions.
Sure. And Bernhard, your point was very interesting, that you're buying you're seeing not only the asset, but actually, I think the German phrase for it is that you buy the cleaning lady with the cleaning bucket, and you're basically buying the entire desk, the entire restructuring group, and as well as the assets themselves. Tamas, you're every day on the phone advising your clients on how to prepare for the moment that that these emergency measures terminate, whenever that moment might be. What sort of advice are you giving your clients? Is it in line with what Anton and Dana are doing, or do you have a different view?
Well, we see different moves in the different countries and in the different banks. And at this moment, yes, still most of them are waiting, because if I see Hungary, for example, we are still under moratoria. So a big portion of the portfolio is still under moratoria, and no one knows, for example, whether end of June, when the current moratorium expires, what will happen, whether there comes another extension or no extension is granted. Or when I see Romania, in Romania, I see an extraordinary moratorium regulation, from the sense that anybody who did not take an at least 9 months last year can basically anytime get to the bank and asking for 9 months of moratorium even this year. Or if I took 1 month last year, I still have 8 months to go. Tomorrow I can go to my bank.
I got very excited. I used to take a loan in Romania. Go on.
and I will get another 8 months of moratorium. So that's why it is quite unpredictable when this moratorium will really expire.
Indeed.
And the other aspect is that central banks are and were pushing the banks to create as much provisions as possible. And this, from a lot of perspectives, reduces the appetite then to go to the market afterwards from a capital reserve perspective. Also, the low interest rates reduce the benefits of selling it on the market, because if you compare the haircuts that you will get to debt collection agencies and you compare it to the cost of keeping this portfolio, then the balance is a little bit towards keeping. And there is another aspect that we take into consideration, and this is the impact on liquidity. Because if the bank expects some issues with liquidity, and you expect that the NPL portfolio in the end somehow will repay, especially when we talk about mortgages, it makes a lot of sense to keep it in the balance sheet and finance it temporarily if you don't have a capital issue, rather than selling it even with a loss, because then you lose the liquidity impact as well.
A very, very good point. Anton, did you want to add to that? Is that basically the view from Fibank?
Yeah, this is my personal view as well. Yeah.
Yeah, interesting. And Maja, I mean, you're advising clients as well. What are clients asking you about, both from the seller and the buyer side? What do you see happening in the market?
So what we have seen a couple of NPL transactions. Basically, one bank disposing a portfolio before, consolidation. And a couple of single tickets, interesting single tickets sold in the market. But otherwise, as mentioned by the others, we are still tied in moratorium, which will last at least in Slovenia until autumn, which is a long time. And therefore, we have seen in the market mostly refinancings from the on the borrower side, and also already restructuring cases, and that were mostly companies that were, carrying a lot of debt from before. And these companies had difficulties also to access the liquidity loans provided by the state via banks. I would also add that the central bank is carefully monitoring the existing portion of NPLs in the banks. So I would assume that there will be an incentive from a central bank to dispose the existing NPL assets before the COVID-related NPLs come to the banks and to the market.
Right, to get rid of the back book before you have the tsunami of the front book.
Exactly.
But yes, I mean, it's we've discussed a little bit about the expectations in terms of transactions and pricing and so on. It's interesting. I mean, there have been a couple of transactions in Serbia. Anton, as you know, Metro 5 has just come to the market in Bulgaria, and there's the usual pipeline of monthly, unsecured consumer loans that are moving. But I guess we're all a bit kind of in this suspended animation. What's interesting, Maja, the point that you make is that in Slovenia, the measures will be extended until the autumn, whereas in Hungary, they're intended to roll off in June, and each different jurisdiction has a different maturity date. In very interdependent and relatively speaking shallow markets, with the exception, I would say, of Hungary and Romania. So it'll be interesting to see who's the first mover, because I expect politically and economically, it would be suicide to be the first one. That was the 2008 story. When the markets do, I mean, eventually there's going to be a return to normalcy. That's what they tell us to keep us alive. Where do you see the greater part of the activity happening? In what sectors? Edwin, do you have a view on that? Are there particular sectors where you see some activity happening? Hospitality, retail, and anything like that?
So initially, my thoughts are that we'll probably see more flow in the unsecured consumer space, just because those are the easiest credits for banks to sell, and they've got a lot of experience of selling them, and there's an acknowledgement there's a lot of expert providers in collecting on these types of assets. So I'd consider these will probably, once we reach the end of moratoria and some kind of normalcy returns, that those would be first. And then look, following that, it's more difficult to predict. It's become a bit of a cliche to say that retail is a challenging asset class, and I think you'll see continued disruption there, and that's not just a result of COVID. That's also a result of secular changes in consumer behavior and the way and increases in online shopping and in Western Europe, which is probably a few years ahead in terms of the shift to online. You can see there's probably a foretaste of what's likely to happen in other countries, and then also probably in hospitality as well. But one other interesting point, and like Anton referred to earlier, I think that we can actually, the assets that come to market, we can actually expect to be of a much higher quality than in general than they were for the post 2008 NPLs that came to market. And the rationale for that will be, and I'm sure Anton and Dana can comment on this better, is that banks have learned their lessons from the pre-financial crisis. So underwriting standards have been in general much higher. The types of assets that banks were willing to finance, the types of security structures they're willing to enter into, and the overall robustness of approval processes will mean that the general quality I see coming will be much higher, which will probably lead to higher prices of NPLs on the dollar.
Very interesting. Anton, do you agree with that, or do you have a different view?
I completely agree with that. What Edwin said, basically, our assets are very, very highly collateralized, and the asset quality is pretty good right now. So yeah, completely agree.
And Dana, your insights from Raiffeisen?
Yes, so I also agree with this. Asset quality is increased, and it's also highly, let's say, supervised by the regulators. But what I would like also to bring as a perspective of decision to sell is also our promise vis-a-vis customers. Meaning that it's not always only the decision regarding risk cost and what other incentives and interest rate, but it's also how we deliver vis-a-vis our customers in terms of support, because this is different from the financial crisis. So we understand good businesses really need support. So the restructuring, this I wanted to make the point, it's still an important activity which I see increased in the bank, and is not only about debt restructuring, but it's also about equity availability. So probably here is a lot to be done from more stakeholders, especially for SMEs. We know that they are lacking in this respect. And also this public guarantee scheme, maybe they can also, support the equity, not only the debt. So in this respect, I see more, let's say, in the same time. So NPL sales decisions driven by different factors mentioned before by our colleagues, but also restructuring efforts in the bank increased.
You've just made my heart go pitter patter, because we just relaunched our restructuring and insolvency practice, and I had to talk a lot of people into this, but now I see from what you and Anton and Edwin have said that it was absolutely the right on message, right on trend. Bernhard, what's your thought about this? I mean, you're buying the whole package, so in effect, you really are taking a restructuring approach, because you're doing operational overview.
So, yes, we are in the last years, we have specialized really on this secured SME and corporate portfolios, which we have also, been quite successful. And here we rarely do legal steps. So I think 70–80% of our solutions are in the restructuring space towards the portfolios we manage. So legal, collection is rarely the case in those customers, and therefore that is exactly what also Dana said from the RBI perspective. There is a certain promise to the customers which the banks have given, and I think this is something coming out of the financial crisis 2008, where banks have been seen having, I would say, they had a quite bad brand generally, and so they needed to work on this brand. And therefore, as we are also supported, and our second largest investor is EBRD. We are also supporting here, especially on this early stages of the forbearance, of the restructuring. And so therefore what we offer are certain, on our asset side, we offer not only buying the portfolios, but we offer also some financing where banks maybe have a problem in some stages, that we are also offering some financing. And secondly, we are also offering, as I said, to take over some platforms which are either already secondary market platforms, so already carved out from banks, or already are services, to be quite earlier in the restructuring. And that also here, the cooperation with the bank, for instance, in Greece, we had a joint venture with the bank where we did arrange a securitization. And here, clearly the restructuring setup was together with the bank. So we are much earlier in the process. And I see this here in this crisis coming in the same stage, even before that you have some measures that those companies don't default even, and here it's I think much going in this restructuring actions you can do before a company defaults, and therefore the tools are different to the crisis we had.
It's so interesting that this is coming out during this panel, because my experience, or my feeling before we even went into COVID, that we were going into sort of a late stage in the whole NPL market, where it was really turning into more of a private equity, private debt type of situation, where, as you said, Bernhard, that you're coming in, you're bringing in debt or equity and know-how. That's very important as well. And basically capturing the borrower before that borrower goes off before it becomes just a collection matter and a liquidation matter. And the recovery is just so much more valuable in that scenario. Tamas, what are you recommending to your clients? Is this what you see in your world? Is this kind of the direction you're taking your clients?
Yes, as well. And from this was, I completely agree with Dana. Actually, the entire way how collection is managed significantly differs now in 2021 compared to after the financial crisis, because at that times the major focus on collection was recovery. Now the major focus is to have collection as part of the positive customer journey. So the intention is not to recover as much as possible, but the intention of most of the banks is to cooperate with the customer and find the best possible way how to move ahead together. And the banks are using a lot of tools. Restructuring is one of them, but also providing self-collection option when the bank is pushing the client to pay back and to give us a payment promise, but giving the option for the customer to have on their mobile phone a nice application where they see their portfolio and they can by themselves give an offer to the bank. Okay, I cannot repay now, but I can repay this and this amount in this payment schedule. So the entire way how collection is seen is changing, fortunately, and for good.
Very, very interesting.
And just to add on this journey, because this is very important. Therefore, I think the way also even in consumer, as Edwin said, that's normally the first stage coming to the market, is here, for instance, via digital collection, where you don't go with call centers or others, where even those customers can do their payback plans by themselves. I think that's very much 21st century, I would call it, and don't go with even call centers and other things, because that's, I think, inappropriate in these days.
I think that you've all raised a very interesting points. We're currently working with EBRD as well to address some of these issues and kind of take ourselves into the 21st and maybe even the 22nd century. As Dana said, the electronic auction platforms, absolutely brilliant. They're just getting more and more sophisticated, and they give you, larger optionality and access to a larger pool of investors, getting away from that humiliating call center experience where you come in and you get, as Bernhard and Tamas said, where you come in and you get slapped around, as in German the word for guilt is the same word for debt. It's Schuld. So it's this feeling that somehow you failed in life through no fault of your own. And the points that Anton and Edwin made about how there was sufficient preparation or better preparation, and the thrust now is to get away from just crushing your clients, but to actually revive your clients and partner with your clients and kind of bring them back out of the zombie state. And this brings me, Maja, to kind of the next stage, because a lot of this restructuring and as Dana mentioned, the electronic auction and so on really requires the requisite legal frameworks in each jurisdiction to support it. I mean, right now, one of the things that we're working with EBRD about is that a lot of the processes are quite cumbersome. They're onerous. You have to go through a bailiff. You have to, the notary has to read you your contract. It's just very 19th century, exhausting. And you physically can't do this during COVID, and post-COVID, there'll be such a demand for a different viewpoint. Maja, what are you seeing from the lawyer point of view? Are you seeing that there's going to be regulatory changes? Do you see a demand for that?
Well, restructurings as such haven't really started yet. There were just, a couple of cases. Last year, more difficult stories, as I mentioned before, basically over-leveraged companies from before. But nevertheless, we started thinking, is our legislation framework and also in our neighboring countries fit for the restructurings after this crisis, when we all come out from COVID state? And basically, most of the jurisdictions in our region do not have any special, let's say, scheme of arrangements. We have the standard bankruptcy proceedings, or we have compulsory settlements, but it's rarely to find schemes of arrangement or compulsory settlements for SMEs. That are, let's say, simplified, less costly, more efficient, not involving maybe the court. Or, for example, in Slovenia, we are lucky to have at least that. For micro companies and self-entrepreneurs, we have a simplified way of compulsory settlement. But the court-sponsored financial restructuring, for example, has been made after the last financial crisis, and is basically anticipated only for financial creditors and financial claims. And we don't have special, let's say, restructuring tools for restructuring, let's say, retail shopping centers, where sometimes you just need to get a relief for a rent or something like that. And I know that certain scheme arrangements exist, for example, in UK, of that type. So basically, we just have standard legislation frameworks that may not work for certain sectors that were impacted by COVID.
And Anton, you have a foot in both worlds. You're commercial, but you're also a lawyer. Do you have a view on the Bulgarian legal regime in that respect?
Yeah, sadly, but I agree with Maja, with what Maja said. Unfortunately, in Bulgaria, I believe that we don't have the armory for proper restructuring. We don't have the tools, the necessary tools. Mm-hmm. Actually, just to share one very recent change in the applicable legislation. For instance, there was a change in the applicable period of limitation with respect to receivables from individuals. It was enacted in December 2020, and basically it became it introduced 10-year absolute limitation period with respect to receivables from individuals, and this is going to enter into force in June 2021, and will apply retroactively. Now, this change, even before being enacted as effective legislation, was already very disputable. Naturally, especially its retroactive part. Yeah. It is currently challenged before the Constitutional Court. But why I'm raising this? I believe that this newly enacted 10-year absolute period of limitations with respect to receivables from individuals would probably push both banks and collector agencies to speed up their collection timetable. Of course, as far as the legal framework would allow them, but this is something which I consider against proper structuring.
The unintended effect of something that was supposed to be consumer protection. Yes.
Yeah.
Yeah. We saw this in Romania as well in 2017. They passed several consumer protection acts, which effectively paralyzed the entire NPL market and stopped banks from being able to offload their bad debt. Dana, do you have any thoughts about this? Because you're again, I mean, you're not
yes.
on the legal side, but you're doing this day.
Yes, thank you for asking. Actually, what we are looking also these days is the European legislation in preventive restructuring. So we know that for the companies, okay, we have certain kind of deadline for implementation, which is not fixed for every country, but in principle it's 1st of July. We know that some countries who had to make adoption of this European legislation locally already applied for a prolongation of implementation. But we know, for instance, in Austria that is going to be in force in, I think, till end of March, if I'm not mistaken. But anyhow, soon, I think in Germany also. And in this we consider to be a kind of game changer also in the restructuring, because we'll always give an option outside of insolvency framework. How this will function in reality and how we can, let's say, support, because looking at the provision of the legislation as being not non-lawyer, but from what I understood is that a lot of, let's say, it's hard restructuring. So they are addressing really significant liquidity problems based on certain, let's say, calculation. But it still gives, I hope, an opportunity in a framework for all stakeholders to align for some restructuring, even hard restructuring, instead of going basically in liquidation. So we are looking at this in a let's say positive way, but also let's see how it will be applied in the local version of the law, which we do not know yet. But we are looking at this, so we consider to be an important factor.
There may, weirdly enough, be a silver lining to this pandemic. We may actually hop ahead in many respects. as you were saying, legal and regulatory improvements and realignment. As Dana mentioned, the electronic auctions, as Bernhard and Anton and Edwin and Tamas mentioned, looking at borrowers as partners and trying to restructure them and kind of bring them out of the zombie state. Another tool in the box, which some of you have had some experience with, and Anton, you and I have been talking about since we were teenagers, is the concept of securitization. You know, this was implemented originally in Italy with the GAC, the government guarantee, and then carried over to Greece with the Hellenic Fund guarantee. I'm sorry, with Hercules. In order to just move large volumes, because it's impossible to move such huge NPL portfolios, that volume in traditional auctions. Edwin, your firm has had quite a lot of experience in Greece. You are the securitization firm in Greece these days. Do you want to give us some insights on how that works and whether you think this could be carried over to our little neighborhood?
Yeah, sure. So yeah, as we've advised on a number of the transactions in Greece, I think probably all of them that have happened so far, we've been working on. And look, the NPL securitizations and Hercules have allowed, like you alluded to, Denise, have allowed very significant transactions to happen where there probably wouldn't have been sufficient capital available in the market. And the main advantage of doing these is that because you're able to have the vendor financed a senior note at a reduced coupon, that it facilitates transaction pricing, which might not otherwise be achievable in the market, given it's probably going to become particularly relevant given in other countries, given that the senior financing market is, and I know it's less relevant to the CEE, but the senior financing market is much more challenging than it used to be. And we can see it expanding into other countries. So we think it will probably start happening in Cyprus and also in Spain and Portugal. So in terms of applicability to CEE, I think the main challenge, because
last time I checked, Spain and Portugal are not in my neighborhood.
So look, it's going to be wide. It'll be wide ranging in its use. I think in terms of CEE, probably the main challenge is around transaction volume. So obviously, to implement one of these transactions, there's a significant investment in terms of time, in terms of legal costs, and in terms of structuring, which means that there needs to be probably a certain size to the transaction for there to be a net benefit. So if I had to give a high level estimate, there probably needs to be at least 100 million of collections in the portfolio for it to make sense to go through the process. And that's probably increased in countries where there isn't really, let alone NPLs, there haven't been securitizations. So we've actually looked into it a bit, the feasibility of doing these transactions. So it is possible because there's the EU 2402 regulation on securitization, which has been implemented in all of the EU countries. So which means in theory transactions are possible. There's certain challenges, particularly around insolvency remoteness, because the EBA requires that securitizations aren't subject to unduly severe clawbacks, so they'd have to be working with counsel to get a suitable opinion. Whereas in countries with an established structured finance market, there's a safe harbor that this is specifically carved out. So overall, we think that securitization is going to be a tool in CEE which is considered, but its applicability is probably going to be more relevant to the larger banks in the larger markets.
Mm-hmm. Thank you for that. But Bernhard, you've done quite a lot of securitization in Italy. Do you have any thoughts on this as well, the applicability particularly to SCE?
Yeah, no, we have done also the first one in Greece, actually before Hercules came in place. And we have also done for other banks. And here, we think there could be this tool of securitization used in certain structures. We also have used them where the bank is still part of the transaction. And here we assume that, under IFRS 10, also a servicer needs to be a part of the transaction to have capital relief concluded. And therefore, we think it can also be used, and we discuss with banks in CEE region to do that. But as Edwin correctly said, the size is the problem because most of the markets are quite small. So the bigger markets like Poland, there might be some useful, I think, underlying coming, which you can use. But in other countries, there might be a lack of size on that. So the only thing you could do, but it's more complex, to make it cross-country and or to go cross banks. But the complexity might avoid then doing it in reality.
The points that you bring up are absolutely spot on. Anton, you have a lot to say on this. So I give you the stage.
Yeah, of course, I'm going to limit myself to Bulgaria because this is the market that I know. So, as you know, probably no NPL securitization to date in Bulgaria. And by Bulgaria, I mean a securitization that is composed of NPLs originated by a Bulgarian institution. Mm-hmm. What is the reason? I'm not sure, but of course, I share what Edwin and Bernhard said about the volume, the complexity, the price. We don't have any government backing scheme in terms of securitizations in Bulgaria, which is, of course, something that we would need if we would like to go into that direction more easily. Mm-hmm. I see several challenges that could certainly be overcome, but the questions, of course, are when and at what price. First, it has not been tested if there is sufficient investor appetite with respect to this type of instrument in Bulgaria. Second, of course, it may be argued that the amounts of NPLs in any single bank in the country that are similar in nature, in order for that to be transparent and simple and transparent securitization under the securitization regulation, are large enough for securitization by a single bank. So of course we could consider a joint securitization, but this would come with additional level of complexity in many aspects. And also with respect to investor appetite, it appears that there is some, but only once there is such an exercise on the horizon, we will know for sure. In Bulgaria, plain vanilla portfolio sales are usually done between banks and collector agencies. And such agencies are not typically investing in similar instruments. They are usually the servicing companies in these structures. Mm-hmm. And I believe the majority, if not all of the main investors in similar instruments have limited knowledge of the Bulgarian market. And this is something that they will need to gain as a prerequisite to investing in such an instrument. And the same is also true for credit rating agencies that are going to be used for rating of the respective tranches. Right. So these are the challenges that I see for such an exercise in Bulgaria. But of course, it will certainly be welcomed for the reasons that Bernhard and Edwin mentioned, because it comes with its regulatory benefits, but at certain cost.
Indeed, indeed. I mean, Bulgaria has had a successful performing securitization. So if we could make that next leap, as we're leaping with a lot of things in COVID, it would be a very effective tool in the box. Dana, is Raiffeisen thinking of securitizing any of its non-performing assets?
So we also looked, like everybody, as you also said, it's not a new topic. So we looked on different options, and all the factors which were mentioned here, size and the different jurisdictions, and all the bank role in such transactions, what are the different purposes, made us to reach the conclusion that there are also currently other tools who may support the objectives of the bank, which let's say with higher chances to be implemented. And my opinion here is that in the future, in case any national bad banks or other similar entities will be created to consolidate basically the NPL volumes, such a tool would have, let's say, better chances to implement. But would not be enough. So I guess many things on the market to change that in that direction, at least for the CEE region.
Maja, you have quite a lot of experience with the bad bank because Slovenia was one of the first to set up DUTB, and I know that we've had a lot of discussions about securitization. Is Slovenia looking at that at all?
Yeah, interestingly enough, we were promoting the securitization for a couple of years, as law firms, as one of the options, and for the banks and the investors in NPLs, and nothing was really moving. But last year, basically, there was increased interest from the banks and also investors in NPLs who bought NPLs before, and starting to look into securitization projects and vehicles. So we basically advised a couple of times on that. No one, at least now, has gone into the project yet, but we see increased interest, and also in Croatia. So I think I expect that maybe even we are, a small market and the volumes are small, but it is interesting to see that there is an interest and that basically the banks and investors are already looking into that.
Yes, absolutely. Tamas, do you hear that from your clients as well? Are they asking you about this as a method of resolution?
Not really.
Okay. All right. Well, we'll keep you posted as soon as we resolve it. We'll give you the information. Well, I see now that we're coming to exactly our 1 hour mark, and I'm nothing if not punctual, except for today, of course. So I just wanted to wrap up. First of all, to thank you for being such an expert and very experienced panel. I've been taking notes the whole time, and got a lot of great ideas from you guys. I'm sorry to plagiarize your excellent ideas. You'll be hearing them again and again. As a final word, maybe we can go around in a circle and just say, what we see, our final, word or two for the coming year of 2021. Bernhard, you look ready to give that final word. Maybe we could kick off with you, not to put you on the spot.
No, I'm always happy to be in a spot. So going forward, as to summarize, I see that there is a certain backbook transactions coming to the market. I see new books not coming before end of year first. Secondly, as I said, our topic is very much concentrating on platforms. So we are combining transactions, not only the underlying assets, but also the people and the IT. We are happy to carve it out of somewhere or buy something which is already carved out. As a second point, and last but not least, is technology. So we will launch in March a digital collection system which respects individuals much better and gives users technology to that they can do their own payback plans. And last but not least, securitization. I hope we can move this in the CE countries to use it as a tool, because I think it's for COVID clients where you don't need to have, you have to have a capital relief, but maybe you can do it via a platform securitization where clients don't even know that they are transferred to somebody else, which I think is quite a soft and applicable way of doing so.
I think the lawyers on this panel will have something to say about that, but okay, we'll let that one go. Tamas, maybe you have a word or two to close out. What are your thoughts on 2021?
Well, everybody expects a significant increase in the non-performing portfolios. So if we see local regulators, banks, or even the European Central Bank, for Austria, Hungary, or Romania, everybody expects a 3 to 4 times increase compared to pre-COVID levels. Or Slovakia, Czech, Poland, still roughly double size. It means that most of the methods, how we see non-performing loan management, we expect to change, simply because the significant increase. And all of the tools, methods we were discussing, in my view, will point to this direction. So we expect a very heavy increase in customer-facing activities to keep the good relation and to cooperate with the customers. Much more personalized treatment of the various customers, understanding not necessarily the portfolio, but also the individual customer requirements and how to approach the specific customers to find a mutually beneficial way. And on the other side, of course, the models and methods, how we see the portfolios, will change significantly, simply because the numbers are significantly higher. So this requires different treatment than before.
Yeah, so obviously, I think the first half could be similar to the second half of last year. I think there'll be a lot of things in a holding pattern, like we talked about. And then going forward from our perspective, hopefully we have the chance to bring some of the innovations that we've been seeing in other markets into and apply those to jurisdictions in CEE.
I hope so too. Dana, we lost you for a minute, but you're back. Excellent.
Yes, I'm back. Thank you very much. So I'm thinking at three dimensions. So proactivity vis-a-vis customers to find a viable solution on the bank side. Second is to mitigate the cliff effect as much as possible on our side. And last but not least, internal streamline and automation of processes, whatever let's say fast achievement we can get in this time. So these are, let's say, our three priorities.
Thank you. And Anton, from your side, any thoughts about 2021?
Yeah, of course I have. We all got used to the moratoria like we used to wearing masks. It is true that at certain point, moratoria is yet to be lifted. But as a general point, we see a lot of optimism, as I already said. Having said that, we should certainly continue to be very disciplined and work towards the common goal. This morning, I read a quote of the chair of ECB Supervisory Board. And I would like to quote it. Unlike in the 2008 financial crisis, banks are not the source of the problem this time. But we need to ensure that they can be part of the solution. It seems that this is working for the time being, but it needs to continue. Now, this was from the perspective of banks. From the perspective of investors, the events of 2020 have given them pause for thought and forced them to reassess the economy and how they can best achieve a return on their capital after a year in which everything changed. But I believe that we are going to see significant increase in investor activity in 2021. Now, in terms of restructuring, as Dana and the others noted, as a bank, a relationship with our clients is a key. Therefore, of course, we would prefer to restructure if possible, and any other option would be on the second place. And of course, one of these tools would be securitization. There are a lot of challenges to securitization, but they can be overcome. But certainly, if we see that the government is looking for any specific systematic solution in this regard, it would be very nice, because government-backed schemes, at least as we see from the examples in Italy and Greece, have helped kickstart the new NPL securitization transactions over the last couple of years.
From your mouth to the government's ears. Thank you for that.
Hopefully.
That's good. And Maja, if we could wrap up with you, your thoughts for 2021, please.
So I think increased M&A activity, definitely sale of hotels, both we are already seeing in our market, with the end of moratoriums, restructurings, and later on, probably not this year yet, NPL sales.
Excellent, excellent, good. Well, once again, thank you all for your expert and experienced insights. And I wish you all safety, sanity, and good health.